Each of you have had experience with different major asset classes, and the typical ones are apartment buildings, industrial, office, and retail. I'd like to know, and you can tell the audience, what's your favorite asset class and why? And Rob, I'm going to start with you because you have, I think most of your history is buying apartment buildings. So why do you like apartment buildings so much?
Well, 90% of all the assets that I've bought and held are apartment buildings. And I've just got some very fundamental things about apartment buildings. People have to live somewhere. And that just sounds fundamental, doesn't it? But people have to eat somewhere, sleep somewhere, etc. There's very rarely an oversupply of apartment buildings. Like in Vancouver, there's never been an oversupply. There's been a constant undersupply. And that's the case generally across North America. So I'm not afraid of the market being oversupplied. And there's also an ease of operation with apartment buildings. And I've owned shopping centers and I've owned office buildings, and I've found them, frankly, an awful lot of work to manage. Whereas apartment buildings, there's an ease of management. And, you know, I don't have a big company, but if I'm holding 50 or 60 assets at a time, and there's only so much time that I have, I want the easiest assets to manage possible. So that's why I like apartment buildings.
Avatar, you were very smooth at selling all asset types in your career. What is your favorite asset type? And I wouldn't mind you addressing some of the alternative asset types. Right. There's self-storage, which you sold to us, which we still own, the advanced self-storage portfolio. There's seniors, there's hotels. Those are the other alternatives that often don't get mentioned.
Right. Good point. We don't concentrate in one asset class. We have holdings in retail, office, industrial, and multifamily. So the four major food groups are there. But I do see why some companies are branded or want to be branded with one particular asset class. If you mention Hollyburn Properties, you think of rentals, apartment rentals. You talk about BD, everyone thinks about industrial. So we're not striving to be a single purpose branded company. We have, for us, extensive holdings in the hospitality asset class through hotels. And that is a different business. Don't get into the hotel business until you know how a hotel operates. Our first hotel deal, it was just we had to learn from the ground up. And so we got better as we went along in terms of what we developed. But it can be lucrative, but the hotel asset class the cash flow, it can be very lucrative. It really can be. The negative of the hotel asset class is getting a lender to lend in that space. Okay? So if the spread on an office building is 120 over, the spread on a hotel could be 180 to 240 basis points over. And that the financing can be a bit tricky. But alternative asset classes, many of the private equity people that cannot compete with the REITs or compete with the pension funds, they have been forced to look at alternative investments. And without question, self-storage has been a huge, huge winner for those that have invested in that asset class. And you know, when I look at self-storage, I think it's great. There's not a lot of management and not a lot of upkeep. You just 4 walls and a lock and you're done. But really what self-storage is a wonderful way to hold long-term development sites with holding income. Okay? So it's not just self-storage. So I think alternative asset classes are a good segue for people to get into the real estate space and not have to compete all the time with the big boys.
I like self-storage because when a tenant leaves, you roll up the door, you sweep the concrete floor, you don't pay commissions, and you don't have tenant improvement allowances. Really simple. So on the same topic, Colin, I think the people in the audience know the BOZA name as a prolific condo developer, but they may not know that you're also very active with income properties. So can you share with us what asset types you like, what you like to acquire? Is it in Vancouver or is it in other cities?
Yeah, most of the assets that the income assets we owe are in the Lower Mainland. We're very similar to Aptar's group in the sense that we don't really, we're across the board. We invest in a lot of different assets. It gives us opportunity to see a lot more deals. Lately, we've been focused on building apartment buildings, and so we've grown our apartment portfolio. What I can tell you about the apartment portfolio space, so especially in a city like BC, I mean, the affordability issue that we're faced with in this city is not uncommon to Vancouver. I think most major cities across the world, you're seeing affordability, not just in condo, but now starting to see it in rental. And being on the cover of the Vancouver Sun or the paper every day is a very difficult environment to operate in. I mean, at any point in time, the government can come down and lay on another tax, or not allow increases in inflation-adjusted rents and that sort of thing. And so it poses challenges. We also invest and own a lot of industrial. And I look at the industrial space, and you mentioned the Beatty Group, and you see industrial rents that are growing at double digits every year. Vacancy rates are next to zero. To get a large space format is very difficult in the Lower Mainland, and the cap rates continue to compress, and no one talks about it. And it's a great space. The challenge is the deal sizes are a little smaller, and it's hard to deploy a lot of capital when the average building is not so big. So those are two examples, but we're also do some hotel and some other things, and the hotel market right now in the Lower Mainland is phenomenal, doing really, really well. But those are some of the things that, some of the asset classes that we operate in.